Greetings and welcome to Bloomberg New Economy Conversations, the series where we explore how businesses and governments around the world are responding to the coronavirus pandemic. In today's discussion, Resurrecting the Consumer Economy, we're going to take a look at how consumers, retailers, and finance companies are faring this year after enduring the lockdowns and disruptions caused by COVID-19. We'll also discuss some of the ways this virus has created new shopping habits and payment methods, perhaps forever changing consumer culture as we know it. Today, I'm joining you from New York City, and I'd like to welcome our global community of Bloomberg New Economy delegates who've attended the forum in Beijing and Singapore these past 2 years. We also welcome the thousands of viewers tuning in on social media and via the Bloomberg terminal. There will be opportunities throughout this conversation from real-time input from you, our audience. I encourage you to submit questions in the text box in the bottom right of your screen, and I'll invite you to vote in live polling in the top right of your screen. If at any point you encounter technical difficulties, a simple refresh of your browser should help get things back on track. We're going to kick off today's program with a fire starter conversation. Last week, I caught up with Carlos Brito, the CEO of a massive consumer brand, Anheuser-Busch InBev. It's the world's largest brewer with operations in nearly 50 countries and hundreds of brands, including Budweiser, Bud Light, Stella Artois, and Corona. Take a listen to the interview. Carlos Brito, welcome to the program.
Thank you. Great to be here, Andrew.
So you were one of the very first global consumer companies to feel the impact of COVID-19. That's because you operate a brewery in Wuhan, China, which of course is where the outbreak began. Tell us a little bit about what happened in Wuhan and how's the situation there today?
It's interesting you asked this, Andrew, because in January, in the first week of January, first 10 days, I was in China and I traveled, throughout 5 different cities. We had wholesaler conventions. We had people from all over China. I interacted with everybody. Everything was normal. Then I came back. 10 days later, the whole thing in China started with the lockdowns and the travel restrictions during the first day of Chinese New Year. In Wuhan, we have one of our close to 40 breweries. We have a big operation in China. It's one of our top 5 countries. We have 30,000 colleagues there. And Wuhan, yes, it's a big brewery, but it's one of many. And everything in the country went through a lockdown, a shutdown, consumers, businesses, everything for a month and a half. And then we started reopening. And Wuhan was one of the last breweries to reopen. But now for the past 2 months, everything's back to normal in China as much as it can be. When you look at retailers, bars, restaurants, everything, they're pretty much all open. Our offices are back to normal since 2 months. So China's way ahead of the curve. The same with Korea. South Korea, we have also big business there. And they also experienced the COVID as China did in the end of January. And they're all back to the new normal.
So is Wuhan a bellwether for global consumption trends today?
I think we learned a lot in China. I think one of the big advantages of being a global company, and we operate in all continents and have big, business around all the major countries. The big advantage, as you said at the beginning, was that we learned from China early on how to be able to operate, guaranteeing the safety of our people, how to observe and to understand where consumers are going in terms of their consumption, how to adapt our supply chain to the new reality. And when the pandemic started becoming, going to Europe, Africa, the Americas, we had the protocols that were developed in China and South Korea by our colleagues on how to operate. So all we had to do was pretty much translate everything. And because you had to observe social distancing, for example, within the breweries. So you had to operate with fewer people. You had to work from home. You had consumers now not being able to go to bars, restaurants, hotels, or travel. In a lot of occasions, migrating to the in-home occasion. And with that, consumers buying more in supermarkets, grocery stores. And that had a big impact on the supply chain in terms of package mix, brand mix, in terms of delivery, distribution. So agility was something that we learned from China that was very key to navigate given the fluidity of the situation and uncertainty, because every country was a bit different in how the pandemic developed, in what measures governments took in different countries in terms of lockdowns, stay home type mandates, and how consumers also reacted. But the learning in China was key for us to navigate in Europe, Africa, the Americas.
You've just announced record beer sales. It seems as though people can't wait to start drinking again. What's driving this, and is it sustainable?
It's interesting you asked that, because in China, because it was the first country, the big country of ours that was affected, we did a lot of consumer research during the pandemic. And what we saw is that the question was, what would you like to do once the pandemic is over? And what they told us is that they would love to go back to their normal life. So they'd love to go to restaurants, to travel, to meet their friends physically, to go visit relatives, family members, and do all the sorts of things, go to ball games, go to music festivals. So that gave us a little bit of an insight that yes, there'll be a new normal, but the fundamental things that consumers are trying to do when they have free time and in trying to keep a close relationship with family and friends are still very much deep inside of them, and we don't think those things will change.
Beer is obviously a colossal global industry, but it's also very local. You're literally everywhere. Take us around the world. Where are you seeing positive consumption trends? Where are the problems?
Well, if you look at you're very right, Andrew. Our business is global, but very local at the same time. If you look at everything we sell, more than 95% of what we sell, the supply chain of that 95% is all local. We buy raw materials from farmers that are local. We use water local. We hire our colleagues locally. We brew locally. We sell back to consumers locally. So we are very connected to our communities. And that's why during COVID, once again, we tried to be in a big way part of the solution. And we provided in many countries hospitals. We used our trucks that were idle to help governments distribute food. We started producing face masks, face shields, alcohol sanitizer, hand sanitizers, because we deal with non-alcohol beers. So the alcohol we extracted from the non-alcohol beer, we repurpose to hand sanitizers. So we did all these things because, again, we're part of the community. Our colleagues and our consumers live in the community. So that was something that was key for us. It was key for us also, we learning from China, to establish those priorities very clear day one. First priority, safety of our colleagues. Second, our communities. Third, our consumers, how to support them at home with entertainment, with streaming, with delivery services, because they had to be at home. How to support the supply chain, be it upstream our suppliers or downstream our bars, restaurants, pubs, our retailers. We did lots of things to support them to bridge this lockdown. And at the end, how to support, again, how to be prepared for the recovery, because we knew the recovery would come, and how to understand the new normal and how consumers would behave.
Talking about the recovery of the new normal, there's a lot of concerns that many bars and restaurants in cities will never reopen. What are you seeing? And then more generally, how seriously do you take this idea that COVID-19 could trigger this sort of stampede out of cities?
Well, in terms of bars and restaurants, we're very committed to their recovery. In many countries, are getting together with other CPG companies, like in Brazil, for example, and we are there to finance their coming back to business, to finance that first purchase when they reopen, to provide them with a reopening kit, hand sanitizers, gowns, gloves, everything, and to also give a discount on some key SKUs, key products, so they can get back to business. When you look at our supply chain, most of our farmers that we buy from are small farmers, 15,000 of them. And of the 6 million retailers that we service on a weekly basis throughout the world, most of them are small and medium businesses. So our success is very connected to their success. And that's why we're so connected to having them recovering from this whole pandemic that affected them in a big way. So, for example, one of the things we did during the pandemic was twofold. First, we launched in many countries, in more than 20 countries, vouchers So consumers could buy vouchers to help the retailers while they were closed, their favorite pubs, and then redeem that when the pub would reopen. And the second thing is that we put very quickly, because we have a very big tech team inside our company, we put in place apps that would connect consumers that were in stay home type mandates and orders with our retailers that were in shutdown, but they need each other. So we put that app to connect them. And in the Americas today, this app is already a big deal. We have hundreds of thousands of retailers that are connected and hundreds of thousands of consumers that are using it. So we did everything we could during and now after the pandemic to make sure this pubs, restaurants will come back.
So it seems pretty likely that more and more people will work from home permanently after this, even after the pandemic has gone away. Does that concern you? Does it affect you in any way? Fewer after work drinkers?
Well, our offices, for example, if you take us as an example, we've always worked in open plan offices. So nobody has an office. I work in a big table with my direct reports around me. Everybody can see me. Everybody can come talk to me. There's no doors, no assistants blocking anything. So we've always done that for now 30 years because we believe that people having contact with each other is very important. So, for example, I think Zoom and this kind of technology can bridge during a pandemic, much better than I thought, and I think most people thought. So it's very efficient, but it does not replace 100% the experience of people bumping into each other, having a coffee at a break, having a beer at the end of the day. We have bars in our offices, so at the end of the day, they can have a beer, talk about business, talk about life. It doesn't replace the traveling. A lot of my routine, for example, is traveling to all these countries around the world. And when you travel, you meet wholesalers, you meet clients, you see consumers while they're shopping, you ask consumers questions. So all those things are not programmed interactions that cannot be replaced easily by Zoom. Zoom can replace what's programmed. So meetings that are, in your calendar. But these things that happen as you go through markets and you see people buying and you see your people in action and you interact with the customer and you visit the wholesaler, these things technology cannot replace. So I think, yes, there'll be some flexibilization of the work environment, but I think people will find that after a couple months, for example, suppose you have somebody new join your company. How can this person, it's not fair with them that we continue the whole life like this, because they'll now be able to understand how the company works, how the culture is all about, because they won't be able to interact with people. So I think what's happening now is that we're using a lot of the social capital that we've been accumulating, but there's a limit. At some point, you have to accumulate more capital in the bank in terms of your colleagues and how well you know them.
Last question. Your entire business model depends on bringing people together. Does that change in any way as a result of COVID-19? Do we become less social or the opposite?
No. I think what changes is that, for example, I'll start from the culture of our company. Our culture is a culture of ownership, in that we treat the company as ours, a culture of talented people, big dreams, and more importantly, a culture that we go where consumers go because that's where growth is. So what we've been observing during this pandemic is that consumers have the same needs of getting together. It's just that because of all the restrictions, they had to use technology to do so. But what you also observe is that as soon as these restrictions are eased, consumers go back and try to regain the ground they lost in terms of physical interactions. Of course, consumers are more cautious. They are more, they're looking more at social distancing, wearing masks and all that. But at the end, the physical contact, we believe the new normal will have, it's yet to be defined, but consumers will go to some old habits because those have been ingrained forever. I mean, the human being is a social animal. We like to be together with people. And yes, technology can bridge lots of things, but at the end of the day, the human being is the human being. And I think the new normal will entail lots of things that used to be the old normal, for sure.
Carlos Brito, it's great to have you on the program. Thanks for your insights. Thanks for your time.
Thank you very much. Have a great day.
Our thanks to Carlos Brito. Now, I'd like to introduce our three guests for today's live panel discussion. Sandra Campos is a fashion industry leader, the founder of Fashion Launchpad, a digital masterclass ed tech platform specifically for the fashion industry. She's the former CEO of Diane von Furstenberg, and her work with other major consumer brands includes Juicy Couture, BB, and BCBG. Welcome to the program, Sandra.
Thank you. Thank you so much for having me.
Nick Molnar is the co-founder and US CEO of Afterpay, a fast-growing global fintech company that allows consumers to pay for items in interest-free installments. Nick joins us from down under. He's in Sydney, Australia, where he's just become a new father again. Thank you for staying up late for us, Nick.
Thank you, Andy. Thanks for having me.
And finally, our very own Tom Orlik, Bloomberg Economics chief economist and the author of the just published and absolutely must-read book, China, the Bubble That Never Pops. Tom, thanks for being with us today.
Great to be here, Andy. Thanks for having me on the show.
So whenever the topic of the post-COVID consumer economy comes up these days, two themes invariably dominate. First, the digital revolution, and second, the rise of the Chinese consumer. And of course, these two themes are intimately connected. So I'd like to begin our conversation there. Sandra, let's start with your industry. Fashion, a $2.5 trillion global industry that has just cratered. Nobody is dressing up, at least not in America. J. Crew, Neiman Marcus, JCPenney have all filed for bankruptcy. Question, will bricks and mortar retailing ever come back? Is digital the salvation?
So I think we can look and say, will there be brick and mortar? Absolutely. To the degree that it's been, absolutely not. And it shouldn't be. We have had way too many stores. We've had a saturation of, malls and same retailer that's across the road from one another. There's a lot of options and there's too many options. So we have been far too saturated with brick and mortar stores, and we have to really right size that at this point. What digital is definitely more convenient way of shopping, a more convenient way for a brand and a business to be able to, and a retailer to be able to display their products and display a full line without having to have a store that's a large store because of the costs associated with that as well. So I think that the reality is that as business has continued to change and as experiences have changed and customers are craving so much more and the consumers are craving more, there's a new generation coming in now as well, which Generation Z really wants to touch and feel things. They want to shop. They are kind of now the opposite of what the prior generations have been kind of an angst over, but they need to have something special. They need to be unique. They need to have experiences. They need to feel, whether it's the coffee shop there that they can go and hang out in, or it's a membership club attached to it, whatever the situation is, there needs to be some sort of experience attached to brick and mortar. The beauty of digital is that you can display all kinds of content on digital, on your website, through the emails that you send out to your customers, through social, and connect all that together, and it becomes very exciting. So that's the beauty of what you can do to be able to have that be your flagship, but at the same time be able to service the customer through brick and mortar as well. So the whole omni-channel description that everyone's been talking about for some time is how do we create some experience that it doesn't matter what consumer touch point exists, whether it's social media, it's a brick and mortar store, it's your digital online presence, all of those feel the same to the consumer. There's consistency in what the brand represents. There's consistency in what the messaging is and what the product is across the board.
I just reeled off a whole list of bricks and mortar's casualty of COVID-19. Is there worse to come?
Unfortunately, I think there is. There's still more. We're just in the beginning, and I say that because I think we're at the record year now in terms of store closures, and the estimated number for over a 10-year time period is 100,000 store closures in retail in the U.S. And that's a tragedy, and it's quite a substantial number, as we all know. So unfortunately, I do think that there are more to come.
Staying with you, Sandra, The company you ran until very recently, Diane von Furstenberg, has closed 18 of its 19 stores in New York, leaving just one in the meatpacking district. According to reports in the fashion media, at the same time, Diane von Furstenberg is doubling down on the China market. Doesn't that tell you something rather important about the way the consumer world is changing?
Well, from a DBF standpoint, first of all, 18 of the 19 stores, those were just company operated, flagship operated stores. There were many more stores outside of that around the world. But Diane herself had really invested in the Chinese consumer 12 plus years ago. And she really believed in China and was enamored by China growing up. And so she wanted to really have a presence there. She had her books translated in Chinese, and this is going back more than a decade. So that was something for her and for the brand. She always knew that the Chinese consumer was going to be very important to her and being a relevant factor in China. So the business has 38 stores in China with a very strong Chinese partner who actually manages those store operations, and just started going on to Tmall in the last Q4 of 2019. So Tmall and Alibaba and all the massive amounts of e-commerce sales that go on, that's a whole nother conversation. But yes, first of all, there's a massive amount of Chinese consumers, not only in mainland China, Southern Asia, as well as the 50 million plus Chinese consumers that are abroad. So when you say like Chinese, at least in my experience from a fashion perspective, there's a lot that goes into really defining what the Chinese consumer wants. And you have to go there to see it's not one Chinese consumer, it's not one state in the US. There's Northern China, there's Southern China, there's every single region, tier 1, tier 2, tier 3, et cetera. So you really have to be very connected to understanding who the Chinese customer is from a female perspective, what she wants her face to look like, the colors that work there may not be the same that the colors that work in different parts of the US or in Europe. So it is a significant business, obviously, because of the size of the population, but you have to really, truly understand it, know it, be there to understand, and certainly have a lot more connection.
Nick, you co-founded a buy now, pay later digital finance company that's been one of the very best performing stocks in the world this year, maybe even the best. First, briefly describe your business model and then explain why you're having such a stellar year when the global economy is tanking. Are you doing well in spite of COVID-19 or because of it?
Yeah, absolutely. And apologize for my newborn. I heard him saying hi from the other side of the house. So yeah, I mean, look, we've been really fortunate with what's transpired over the past 5-6 years since we started Afterpay. The way the product works from the most simple form is if you're buying an item for $100, instead of paying $100, the customer pays 4 payments of $25 every 2 weeks. We pay the retailer the next day, and then we assume all of the risks. So it's our responsibility to recover money from customers on the due dates in the future. So really, providing the next generation of consumer accessibility that simply wasn't possible before. And, our mission is to build an economy in which everyone wins. And how we do that in the current environment is really interesting. We founded the business a little bit over 5 years ago with 10 retailers and a couple thousand consumers. And then we went public 9 months later. Being from Australia, that was kind of the only option. And fast forward, I think it's 4 years since being public. We now have 50,000 retailers, 10 million consumers, and doing over $1 billion a month of volume. So growing very quickly. Launched in the US just 2 years ago and growing at over 300% year on year, and did $1.5 billion last quarter. So we've been really fortunate with what's transpired by just tapping into this next generation of consumer that prefers to spend their own money. The business was founded on the genesis of what we saw as a result of the 2008 financial crisis, where millennials in particular said, I prefer to use my debit card and not my credit card. Got to the point where 2 out of 3 millennials in the US don't actually own a credit card anymore. They all use debit cards. and you're seeing a systemic shift now, not just in the millennial cohort, but across very broad demographics as a result of the current environment. So it's certainly very fascinating to watch how people are changing how they're spending.
Okay, but isn't your customer base is mostly millennials, as you say, the group that's been most impacted by COVID-19? They're losing their jobs, their income is down, and for many, the future is pretty bleak. Isn't this a risky area to be in?
Yeah, so what's been really fascinating and interesting for us is that customers have actually become more responsible during this period of time. People, use Afterpay as a budgeting mechanism. Our losses that we released in our latest quarterly sat at about 1% gross loss. So, it's been amazing to see how customers have been responsible during this period. The interesting data that's come out of Visa and the payment schemes. If you look at the month of May, for example, credit card spend had negative 21% growth, but debit card spend had positive 12% growth. So that's a systemic shift away from credit to debit. 90% of our consumers use a debit card, not a credit card. So what we're seeing is that the ocean's rising as a result of two factors. One is, as Sandra was speaking about, there's obviously a very strong shift online. 11 years of growth took place in 8 weeks throughout April. And there's a huge shift away from credit towards debit. And both of those two compounding effects are positively influencing Afterpay's business. But we're seeing our customers use us more responsibly. They're getting accessibility in a way that they couldn't previously, and it's a privilege to build the partnership with them that we have.
Before we get to Tom, I want to bring in our first audience poll and see how our viewers are planning to spend their money. This is a question: how much do you plan to spend on discretionary items this year? 3 options: less than last year, about the same as last year, more than last year. And while we're waiting for the audience to submit their answers, Tom, help us put this into a global macroeconomic perspective. For decades, US consumers propped up the global economy. Now the American middle classes are all tapped out, and the rich in lockdown aren't spending. Can Chinese consumers save the day? We can't hear you, Tom. I think you might be on mute.
Can you hear me now?
Yep.
Have you got me now?
Yep, we are. We can hear you.
Okay. So before I get to that, Andy, I'm going to give my personal answer to your audience participation question. I had to buy something the other day, and I realized I hadn't seen my wallet for the last 3 months. So that tells you a little bit about how much discretionary spending that I'm doing. I'm happy to report that I did ultimately find it under a book, but I think that it's the difficulty I had finding it tells you something about how much discretionary consumption is going on in the Orlik household. So to your question, I think there's some really positive drivers for the Chinese consumer relative to the US consumer, which are going to be important and which are going to play out over the next decade. There's also some reasons for caution. So the drivers, so the first thing to say is obvious, but I think it's worth keeping in mind. The Chinese economy is going to continue outpacing the US economy. They're coming out of COVID faster and stronger. Once COVID is behind us, hopefully in 2021, 2022, we're going to be looking at a Chinese economy growing at probably still 5-6% and a US economy growing at 2%. So the pie in China is just getting bigger much more quickly. Second thing to keep in mind, and this is something I know you know a lot about, Andy, from your time in China, the Chinese growth story until now has really been an investment and exporting growth story. The Chinese households have saved a lot of money, but they've been very cautious about spending. That is now changing. investment and exporting has been overdone. The Chinese government wants the consumer to play a larger role in driving growth. And there's a sort of a cultural demographic shift taking place within China. The older generation who grew up with all the uncertainty of the kind of the early reform era, who did most of the saving, well, they're getting old and they're exiting the labor force. The younger generation who grew up in relative affluence and have a much more positive attitude to consumption, they're the people who are going to be driving the story going forwards. So you've got an economy that's growing fast and where consumption and a younger consumer is playing a larger role. And then the last point I would make on the positive side is if we think about this digital transformation that Sandra and Nick spoke about so eloquently, there's really nowhere in the world which has managed that digital transition, or which is managing that digital transition as swiftly, comprehensively, and effectively as China. The entire Chinese population is now connected by their smartphones to the enormous e-commerce markets created by Alibaba and elsewhere. And that is bad news for some bricks and mortar operators in China. We're seeing, some of the traditional consumer electronics stores, for example, not doing very well. But on a national scale, that's another positive driver. So I think there's lots of constructive things to say about the Chinese consumer. I do expect them to continue playing a larger role. One note of caution, some of the rapid growth we've seen in Chinese consumption in the last few years has come not because people are spending their income, but because people are borrowing more. So we've seen quite a sharp increase in household debt in China in the last 4 or 5 years. It's not really at a worrying level. The US in 2007, just before the financial crisis, had household debt at 100% of GDP. China's nowhere near that level right now. But household debt is rising fast. Ultimately, that's going to raise some questions about sustainability.
Thanks, Tom. Before we get to our first audience question, let's take a look at the response to our audience poll. It seems that a lot of you, like Tom, have misplaced your wallets. 69% plan to spend less this year than last year. Only 5% intend to spend more. Our audience question. This one comes from Denison Motar, and he is a partner at Global Brazilian Investments in Sao Paulo. He asks, should we expect a considerably slower recovery of consumer spending in mid-sized and small cities around the world when compared to regional and global metropolises? I don't know, Sandra, do you have a view on that? Small cities versus big ones?
Yeah, I do. I believe that we will definitely have a slower recovery across, in cities, obviously you have got the population, you're going to have a lot more to consume, whereas in some of the, whether it's restaurant industry or whether it's retail industry that are going to survive because you have that much more to survive. But in smaller cities and towns where this pandemic will have taken out a lot of the retailers or several of the retailers that exist within those towns, they'll have fewer options and won't have as much to use for discretionary spending purposes. So I do believe that they'll be slower in smaller, more suburban type of areas.
Nick, what are you seeing in your business?
I mean, what's been the most interesting for us has been the resilience that small businesses have shown, particularly, we're looking at we do have a big offline business, but when we look at our online cohort, which has been the lion's share of our volume over the last few months, the resilience in terms of consumers supporting their local businesses has been tremendous. The growth curves that small businesses have seen have outstripped bigger businesses. So you are seeing, customers just say, I want to support brands that I love. I want to be there through the good times and the more difficult times. So, how that plays out into more rural areas is, yet to be seen. But we are seeing the small business cohort show a tremendous amount of resilience.
In fashion, China is the big growth story. McKinsey calculates that over the past decade, China accounted for 38% of global fashion growth across all segments and 70% in luxury. Tom, I want to ask you this first. You've just written a book, as I mentioned earlier, China, the Bubble That Never Pops. Can the fashion world count on that?
That's the first time I've ever been asked a question about the relationship between China's enormous debt and the fashion industry, Andy. So I'm going to count that as a bit of a curveball. So let me start off with a positive, a sort of a macro positive for the fashion industry and for the consumer story in China. In the last decade, China has taken on a huge volume of debt. 2008, China's debt to GDP ratio was around 140%. Now it's around 260%. And if we look around the world, there is no country which has taken on as much debt as China in such a short period of time. But there are a lot of countries which have taken on considerable debt, less than China, but still had a financial crisis. Now, at the same time, China's now wrestling with this much more challenging global environment. We've got Donald Trump declaring trade wars. We've got technology embargoes. And so if you think about it, the two traditional drivers of China's growth, investment financed by enormous borrowing, and exports to the rest of the world, they're not really working as well as they used to. They face some really significant challenges. So what does that mean? Well, at a macro level, it means that China needs to transition to a new growth driver. And that new growth driver has to be domestic consumption. So it's a very high level answer. It doesn't get into the level of detail that I know we'll get from Sandra and Nick on the Chinese consumer and the fashion industry. But at a macro level, the conditions are in place to support that shift to consumption, and that can only be a positive for the fashion sector.
Okay, before we get to Sandra and Nick on that, I'd like to pull up a second polling question. If we've got it there, here we go. How do you expect your future shopping habits to change as a result of the pandemic? 4 options. I don't expect them to change. I'm shopping online more frequently. I'm shopping on stores more frequently. I now try to avoid shopping altogether. Nick, speaking of tech's influence on the consumer, you've just hooked up with Apple and Google in the US, which could give you another big boost, I'm guessing. Where do you think the buy now, pay later industry will be 5 years from now? What are the big consumer and demographic trends that will carry it forward?
Well, I mean, look, I think this systemic shift away from credit to debit that we've seen over the past few months is not a millennial thing anymore. It's a mass market transition away from revolving credit. Afterpay as an industry will exist because it's built to be the opposite of credit. So it's like the next generation of how people can budget, spend their own money, and get financial freedom and flexibility. So I think that Afterpay as an industry will be across the world in the not too distant future, and I'm excited to see how that naturally transpires. From our side, as you referenced, Apple and Google, we've made a significant investment in our offline channel over the past many years. There's not a lot of online payments companies that have successfully gone offline. In Australia now, 25% of our whole business is in store and growing very quickly. And to have the opportunity to partner with Apple and Google, where a retailer can go live offline in the physical world in the US and require no integration because it leverages the existing tap and go technology that already exists in the market, is a great lever for retailers at the appropriate time when stores decide or are able to reopen. So, we're there to invest alongside retailers through the reopening.
So if the buy now, pay later industry is as good as you think it might be, won't everybody start piling in? The big banks, fintech giants like PayPal, debit card issuers, and as the competition heats up, how do you keep customers loyal? Credit card customers offer rewards. What's your incentive?
Yeah, the short answer is, I'm so excited by the prospect that everyone says, this is an industry here to stay, and customers are going to get great choice, and they're going to be provided an alternative that, doesn't rely on revolving debt. And just as at its most simple form, if 100% of people pay back a credit card on time, the industry simply doesn't work. It doesn't exist. So that links to why, we've got a distinct competitive advantage, which is we didn't grow up being a financial services company. We grew up being Afterpay. It was built with a purity of values that haven't changed from day one. The moment someone goes late, they actually can't keep shopping until they pay that late payment back. We're never trying to convert someone into an interest-bearing line of credit. The purity of our business model is uniquely simple, but that is an advantage. So, can't wait to see how the industry transpires, but we're fortunate to partner with some of the biggest brands in the world, and we'll keep doing so.
Thanks, Nick. Results of our survey, no surprises there. 63% are shopping online more frequently now, and 13% try to avoid shopping altogether. Sandra, at the Bloomberg New Economy, we're very focused on emerging economies, which of course is where all the world's clothes are made. Places like Bangladesh, Cambodia, Honduras. Let's talk about supply chains. How are these countries going to be impacted by a global industry that's becoming more digital and probably more local?
Well, they will be impacted for a variety of reasons. Obviously, Tom was also mentioning just the trade wars and things that we have going on as well. So, one is in terms of supply chain and what we'll need to do to be able to cater to our consumer faster, because that's what is expected these days. We're all expecting to get things shipped very quickly. And so there is a shift for sure towards countries that do not have the same level of duties, do not have the same time constraints that you have in other parts of the world. But there's some challenges because you've got raw materials also that are predominantly in Asia. So where you might be manufacturing in Portugal, Peru, et cetera, they don't have all of the raw materials for certain types of products and certain fabrications. So there's a bit of that that's shifting. There's also obviously the on-demand model, which is definitely becoming much more local. And there's a lot more that is attempting to, even from a US standpoint, that's attempting to answer that question on having more on-demand products made locally in the US. And that goes into various parts where there's companies in the Northeast and the Southeast, obviously on the West Coast that are creating it. And it also goes into what product categories, so it's kind of, to say a blanket statement isn't really that simple because you've got such differences between kids wear to apparel to evening gowns to sweatpants. It's a very big difference in terms of what you have and where you can create it. But yes, I think that no matter what, there are certain things that the consumer is going to continue to want. He or she is going to continue to want great quality, a great value. So that in and of itself is going to have some challenges in terms of local production manufacturing versus doing it offshore. But also she's going to want to be able to get it when they want it. So that goes into the conversation just about, how much product gets designed, how much product gets manufactured, where it gets manufactured, and how much, what's the level of consumption that the consumer is willing to accept at this point. You mentioned earlier, Andy, one of the articles that came out in the New York Times, which was very specific about the shift, the drastic shift in fashion, not only from a calendar standpoint, but just the amount of product that gets made. And so, from what I see and from what I know from everyone that I speak to as well in the industry, it's time now that we put a pause on making that much product. It's been time, but now the pandemic and coronavirus is actually forcing us to make those changes and forcing us to put a pause on, why are we producing product just to have, to continue to grow revenues when meanwhile you are either marking down and reducing the price and the value of that product, or a lot of it, or you're also, as you mentioned and was mentioned in the article, or you're destroying it to be able to preserve your brand's value. So it is time to reduce that, and that will impact obviously supply chain as well.
So I can't resist asking you this question since you raised this article. It was actually in the New York Times. It ran over the weekend, and it was called "Sweatpants Forever." Is that really the future of fashion? Are we never going to dress up again?
No, I don't think it's really the full future, but I certainly think that we will be looking to be a little bit more casual, a little bit more comfortable for sure, and we will have less places to go. I mean, it's going to be some time before people are comfortable going into convention centers with 20, 30,000 people. It's going to be some time before we go into cocktail parties thinking about shaking someone's hand, right? It's going to change how we think and what we do. And also, I'm not sure, I mean, I could tell you, you didn't ask this question, but I don't know how many women have put on a high heel in the last 5 months when you're sitting at home, so what does that do in terms of is it exciting to put those on, or do they become incredibly uncomfortable at that point?
What's the answer?
My answer is reduced amount of wearing of heels and things. No, I think the reality is, again, it's like, you ask the question of how much you're consuming, and people are looking to consume less. And we have to adjust to that as an industry in terms of making less, but making just great product that's consistent with what the brand represents and what our consumers want when they want it, priced appropriately and fairly. And, I think Nick has done an amazing job with the business that he's built. It's certainly something that I do believe and agree with him that will continue to grow, and big businesses are able to take advantage of that. I think the Generation Z customer is fantastically ready for that as well. But I do think, it's not sweatpants forever, but it's certainly more focus on comfort and a more focus on like just buying what you need and less of what you don't.
Right. Nick, the Chinese, as Tom says, have been ahead on just about every trend in fintech in the world. Are millennials there as averse to credit cards as they are in the West? And has buy now, pay later caught on there?
Not so much from a buy now, pay later perspective, but what has been interesting with the the fast growth of the wallet situation is that essentially at its core, that means that people are spending their own money. It's linking into their bank balances and they're spending money that they have. So, similar to this debit card trend that is at mass, occurring in China, absolutely.
Question here, Nick, for you from Julie Chariel. She actually works for Bloomberg. She's a senior analyst, fintech and payments at Bloomberg Intelligence in New York. She asks Nick, do you see BNPL, buy now, pay later, reaching non-discretionary merchants, including supermarkets and professional services, especially as these categories are strongest during the recession?
Yeah, so I mean, from our side, we've always said that we're not for essential transactions. So we haven't worked with supermarkets in the past. But if you look at Australia as a case study of where Afterpay might go in the US, you can go to the dentist and use Afterpay. You can buy a package or an airline ticket with Afterpay. You can buy your pet food with Afterpay. So there is a very diverse set of categories where you can shop and use our service. So definitely want to partner with the right brands, and we'll see in the US us start to expand out across categories well beyond fashion and beauty that's obviously been our core over the past short while. But I think there's a very broad ecosystem of where there's applicability.
Another quick one from me, Nick. The Chinese internet giant Tencent now owns 5% of your stock. Does this give you an inside track on the China market?
So yeah, I mean, Tencent bought on market like any other investor would have bought on market, an institutional investor. And from our side, it's just about what is our international opportunity. We're really lucky that we've partnered with some of the biggest global brands and we've partnered with them at a head office level. So for us, it's how do we expand globally with them? When you look at the map of our existing retailers, our expansion so far has been very retail led. So even when you look at the UK, we went live with Marks and Spencer, ASOS, Boohoo, JD Sports, all brands that we had global partnerships with before we went into the UK market. So from our side, international expansion is certainly top of the priority agenda. Canada launching imminently as well, and where that takes us, we'll be excited to bring it to market as appropriate.
And Tom, since we're talking about Tencent, topical question for you. A couple of days ago, Donald Trump signed an executive order barring U.S. companies from dealing with WeChat, which of course is operated by Tencent. If this executive order was to apply to China, what impact would that have on U.S. consumer companies in the country? Isn't WeChat the way that China shops?
Yeah, that's a fantastic question. Before I get to it, I just want to let everyone know that I read that New York Times article on Sweatpants Forever as well, and then immediately went to the website of the company providing the sweatpants that were featured, and found that they were sold out. So I'm not sure what that means, whether everyone else already has the sweatpants and I'm going to be the only one without them, or if the sweatpant industry just isn't ready for global domination, but there's clearly a bit of uncertainty there. So on WeChat, I mean, I wonder, I genuinely wonder whether the US administration thought this through. I can certainly see why US-China hawks would worry about a powerful messaging app having a significant market share in the United States. So I can see why they would be concerned about WeChat, in the same way that the Chinese do not allow Facebook or Twitter or Gmail to have a significant presence in the China market. As you say, Andy, WeChat is the critical payment infrastructure of China. It's difficult to buy anything in China if you don't have WeChat. And so, of course, for all of the US firms which are there, for the Starbucks and the McDonald's of the world, they are taking payment on WeChat in millions of transactions every day in China. So I think we're still waiting for clarity from the US administration on this. But clearly, if this applies not just to WeChat use in America, but also to American firms using WeChat in China, that would have some rather far-reaching implications for the way US firms do business in the world's fastest-growing major economy.
Indeed it would. Sandra, here's an audience question from Tazia Smith. She's a managing director at Closed Loop Partners in New York. And Tazia asks, how do you see supply chains changing as a result of COVID disruption? We've gone through that, but her second part of her question, how do you reconcile change with better environmental outcomes? It's a pretty serious question. I mean, a good question. Sustainability is a huge trend. We haven't talked about it. Fashion accounts for 6% of global greenhouse gas emissions, up to 20% of pesticide use, and up to 35% of microplastics waste flowing into the oceans. Customers are demanding change. Will fashion brands listen to them in a post-COVID world, or the opposite? Is it all about cost cutting and the environment can wait?
No, I think it is a must, and it will no longer be a point of contention or even a point that you can't address. I would say pre-COVID, there was a lot of conversation about sustainability. And of course, you can break down sustainability to having to be everything from the fabric that you're using in a garment to the supplier that you're using to the logistics that you're using to get product back and forth, no matter, across the country and across the world. But as it relates to sustainability overall, yes, this customer, the new customer as well, and pretty soon Gen Z, as I keep referencing that, but it's pretty dominating in terms of the consumer spending, and it'll be 40% within a few years. So that consumer will not accept anything that is not good for the earth. They're activists, as we know. They are absolutely demanding to be able to be aligned with the company's message, with a core purpose, and that they want the companies and the brands to be good good for the earth and good for the world in so many different ways. So I don't think that it is even a question any longer that everyone from within a fashion environment is going to have to address the sustainability component.
Question for you, Nick, and Tom, actually, from Jenny Guan, who is the Chief Information Officer of Quantscape Asset Management in San Francisco. And Jenny asks, after the economy reopens, are we going to see consumers release their pent-up demand, or are they going to save more for rainy days? Nick, what do you think? A big consumer splurge coming or not?
Well, I think it really depends on the industry. And there are some industries that you've already seen a pretty significant consumer splurge, and there are others that have been quite restrictive. There are such different trends across different demographics, different industries. You are seeing a Gen Z are still very much shopping right now. And as Sandra mentioned, there will be a direct correlation between their income levels growing and the percentage of the retail economy that they subsequently take up. So, in 5 years, millennials will earn half of all disposable income in the US, and Gen Z will follow that pretty shortly thereafter. So I think there'll be pockets of splurge. I think there'll be pockets where there'll be a revised baseline is the simple answer to it.
Final question for all of you. Predictions. How long will it take for the consumer economy to bounce back? 1 year? 2 years? 3 years? Never? Sandra.
Wow, that's a loaded question, as we know. But, unfortunately, where we first thought, I think this was March 12th, that we all started realizing that we needed to stay at home. And since then, it's only progressed every single week. So where we thought that perhaps by September, then it was November, and we kept pushing it out, I definitely see the fact that this is going to be much, much, much longer. You can read things that say it's going to take decades for the economy to bounce back from this, and perhaps it will across the board. I think it's going to be a couple of years before certainly fashion and retail starts to get back on track again.
A couple of years. Nick, your prediction?
Yeah, look, I think things will definitely recover, but there'll be a new different. It'll be different. There'll be a new normal. Channel split will be different. Category split will be different. How people, their share of wallet going into retail versus hospitality versus travel will change. So I think it's difficult to give an answer. I'm a bit more bullish on retail, and even when you look forward at where China is now and what will subsequently come as others reach a similar state, different trends will play out. I can't give a timeline.
Well, can I make one more comment? Because to that point, Nick, it's really about the shift, right? So especially in the US, where you've talked about the bankruptcies, and it's been everything from brands to retailers and a lot of shuttered stores. That part is really that's going to take some time to be able to get back, because that's going to continue to evolve, and that will continue to play out. So that's why, if you look at retail in general, and when people are going to be spending, all of that shift is going to have to be taken into account in terms of how we look at what the new normal will be. And no one really knows at this point in time, because we may say something different 3 months from now if we have yet again another surge. And obviously after the election as well, that's the difference.
Yeah.
So I would say there's a pre-vaccine recovery and a post-vaccine recovery, right? So the pre-vaccine recovery we're already seeing in China, in Germany, in some other parts of the world. And that's a recovery where the virus is under control, but you still have consumer and business caution, right? Because the risk of contagion is there. So in Beijing, for example, people are fully engaged in some activities, but they're not going to tourist sites. They're not going to crowded nightclubs. They're not going to crowded restaurants, right? So you've got that pre-vaccine recovery, which gets you some of the way towards pre-COVID normal, but not all of the way, and services especially take a hit. And then you've got the post-vaccine recovery, and who knows when that will be. Fingers crossed it's, a matter of months, not a matter of years. That's a recovery where demand can come all the way back to normal. But in this period of extreme weakness in the global economy, a lot of businesses are just not going to make it through, right? So there's going to be a lot of smaller businesses, a lot of service sector businesses that aren't going to make it through. And what that means is that even post-vaccine, when the consumer's ready to come back, the landscape looks very different.
We're going to have to leave it there. Unfortunately, we're out of time. Sandra Campos, Nick Molnar, Tom Orlik, thank you again for joining us today. We're grateful for your participation and for your perspectives. I'd also like to extend my thanks to Carlos Brito for taking the time to join our conversation, and to our audience, both within and beyond the Bloomberg New Economy community. Thanks for joining us. We invite you to join us for our conversation next month on The Great Urban Do-Over, focused on rebuilding our cities after COVID-19. That's on Thursday, September the 10th. Follow the conversation with @NewEconForum on Twitter, or like us on Facebook. And to learn more about other upcoming events, please visit our website at neweconomyforum.com. Thank you, and stay well.